Oh, what up, Hyperchange? Didn't see you there. Just posting a story to my Instagram account. Welcome to another episode. Today, I'm going to recap Snap's Q3 earnings. Just hopped off the conference call. The quarter was a debacle. They totally missed revenue estimates, totally missed earnings estimates. I mean, let's just get right into the numbers so I could show you guys what went down. The most important metric for Snap's business is daily active users. And they'll show you this cute little chart in their investor deck, which shows consistently growing daily active users. But what really matters here is the growth rate. And it's just been falling off of a cliff. To put things in perspective, Facebook has 1.37 billion daily active users on its platform, but it was up 16% this quarter too. So Snap's growth rate of 17% is literally in line with Facebook, despite having an audience that's only 1/5 or 1/6 of the size. The timing is just too coincidental. The second Instagram has launched their stories account, it continues to gain traction. Recent updates in the news indicate that there are now 300 million daily active users on Instagram's stories platform. This is approaching double the amount of daily engagement that Snapchat has. So I don't think this is a coincidence. Instagram is winning the war here. And of course, it's hard to grow revenue when your users aren't growing either. And if you take a look at this chart, Snap's revenue growth rate has just fallen off of a cliff. Sure, revenue was up 62% in Q2, which sounds great, but if you look in that in comparison to the previous quarters, the slowdown is so dramatic. Okay, here's a snapshot of what the earnings really look like. Revenue of 208 million was up 62% from revenue of 128 million the year before, but look at the operating loss. Fell from 131 million to 462 million. That's right. Snapchat's operating loss more than tripled year over year to 462 million. Sure, 208 million revenue is great, but not if you're losing 462 million. Literally for every dollar in revenue, Snap is losing more than $2 in profit. It is mind-boggling how bad of a business this is. And a lot of people have been giving them a pass because they're so early and mature and growing so rapidly. But now that the growth story is vanishing, as user growth is only 17%, it's hard to give Snap much of the benefit of the doubt here. And they're not getting more profitable anytime soon either. Okay, let's compare things to the quarter before because Snap's growing so quickly. Maybe we can see how the business has changed. Check this out. Revenue growth, sure, is up 14%. That's great. But losses have also increased as well. Like Snapchat's business is growing, but it's getting less and less profitable by the day, according to the data they're reporting. A big reason why Snapchat's business is so unprofitable is their hosting costs per daily active user are really high and going up. So they're pitching this as a good thing because their revenue per daily active user is growing faster, but still, I think we got to see some operating leverage here, and 68 cents per daily active user was almost a record except for in Q4 of last year and was up 7% year over year in the quarter. This is a huge headwind on the company's profitability, and this is why their gross margins are so low. Now remember, when Facebook pre-IPO, they were super profitable. They had super high software gross margins above 50%. That's what you'd expect from Snap as they reach maturity. They're a social media, they're a software company. That's why they're getting such an astronomically high revenue multiple. But no, that's not what's going on at all. Snap's gross margins are worse than Tesla's. That's right. Snap is selling software, but they can't sell it as profitably as Tesla sells cars. This is just embarrassing. And I thought this was on an upward trajectory, but it doesn't look like it at all. In fact, in Q3, gross margins actually got worse year over year. They were actually a positive 0.3% in Q3 last year. This year in Q3, they're a negative 1.3%. So gross margins are getting worse. There is no economies of scale in Snap's business. I wanted to also note that on the conference call, they got me excited real quick. And they're like, well, our gross margins in North America were 50%. And then so I read, they put out the prepared statements. I'm going to link to this so you can read all of the transcript of Snap's earnings call if you want yourself. But it was non-GAAP. And then they also go on to say, oh, our gross margin for the quarter was 21%, but it excludes stock-based compensation and this expense and that expense. Sorry. This is why you got to look at GAAP statements. Don't believe the adjusted EBITDA gross margin numbers the company says. Snap is not profitable on a gross margin basis, even though they're trying to claim it. Total BS. So yeah, this is such a bad business if their gross margins can't get above 0% on a GAAP basis. And we have seen no indications that that's going to happen. Okay, last point on the financials here. Snap raised a few billion in its IPO. This should have given them a cash cushion to make acquisitions, invest in growth for years, but they are burning through this cash wicked fast. Now, if you'll take a look at this chart, they had about $1 billion in cash pre-IPO. They IPO in Q1. All that cash from the IPO hits the balance sheet. They have about $3.24 billion in cash with no debt. Then they burned about $450 million last quarter, taking their cash pile down to $2.8 billion. Then this quarter, their cash pile's down to $2.3 billion. They burned $500 million in the quarter. In the past 2 quarters alone, Snap's burned through almost $1 billion of its IPO proceeds. If they keep burning money at this rate, they're going to have to raise capital soon. And with the stock price down, this is what happens. And this is what is called a downward death spiral. To raise money, Snap has to sell stock, but their stock is plunging. So the further their stock falls, the more shares they have to sell to raise the same amount of money. This dilutes shareholders even further. Huge potential debacle coming if Snap cannot rein in its burn rate and figure out a way to not need to go back to the capital markets immediately. Couple more notes from the call. Snap's big focus this year was on improving quality of the app. They started off the conference call by saying, like, oh, it takes 20% less time to open up the camera in Android. This is reducing friction on the app. We're doubling down, giving our engineers Android phones, yada, yada, yada. They're doing a major app redesign for more personal stories that is also going to make the app much easier to use. But they also went on to say that this totally new app redesign could impact the near-term performance of the company. So basically what they're saying here is we're going to release a totally new type of the app, try and get more people to use it, but this could totally backfire and it will almost definitely impact our revenue expectations. That's kind of the hint they're getting at, is our revenue and like business and financials are going to get even worse through this app redesign. Like, just not a good sign. But I will say it is good the company is thinking and noticing, like, hey, we need to get people over 34 to use the app. Creators are creating more than 3.5 billion snaps per day on average in the quarter. That was up 40%. That was pretty cool. I mean, that's a good number here. People creating more and more snaps is definitely a good sign. And a final note, which I thought was awesome and relates to me personally and Hyperchange, is they want to double down on content creators in 2018. Make it a lot easier for people who want to reach an audience that's not personal to do it on Snapchat. They're going to give these creators tools to help monetize content on Snapchat. I think this has huge potential. I mean, I personally don't use Snapchat. I've been thinking about starting a Hyperchange Snapchat for a while. A couple of you guys have commented telling me to do it. And if Snap can keep its user base up and give me tools to monetize my own content on Snap, like, I think that has huge potential and I'm stoked about that. And I think that'll unlock a major piece of the business model. I think they should be rushing towards catering to creators, getting them on the platform, because if they can have creators build a business on Snapchat, that will give them huge staying power. That'll be a moat. That'll make the platform stickier. Spectacles, they had a massive write down. Apparently they ordered way too much inventory of spectacles, had to write down $40 million in the quarter of unsold inventory. I'm pissed because I did not see this coming at all. I went on Cheddar a couple weeks ago saying like, oh, the Snap spectacles, they were a huge success. They sold 150,000 pairs. Like, I still think the spectacles were kind of a success. It's so weird to have an augmented reality pair of glasses on that are filming things as you go around. Like, I just think that's weird socially. The fact they sold over 100,000 it was really impressive to me. And then yeah, Evan Spiegel last month was at a conference saying Snap spectacles in their first iteration sold more than the iPod, and it's like hyping it up. But then a month later in your quarterly report, you have a $40 million inventory write down. Sorry, that just rubs me such the wrong way. That's a huge red flag for Evan Spiegel. How are you going to go to a conference hyping up the sales of your spectacles and then a month later in your earnings report a $40 million write down because you guys way overestimated demand? Like, I'm sorry, that just erodes all kind of trust in management. That makes me think Evan Spiegel is not ready to run a public company of this size. Just embarrassing that they have, you know, thousands of pairs of spectacles in some warehouse because nobody's buying them. Like, man. So that made me look dumb, and it makes Snap look even dumber, but that is what it is. Okay, to wrap it up, here's my 2 cents. I used to be more bullish on Snap because I thought they were dominating with the younger generation. They were gonna fulfill that niche. They were gonna continue to grow up with them. They were gonna figure out their monetization strategy. Facebook and Instagram are making more money. They're valued way higher, but in the end of the day, they're copying Snap's features. Snap is the innovator. That's what I've been thinking, and that's why I was giving Snap a chance. But this quarter, it appears like their business model just has so many issues. Their gross margins are going nowhere. Their operating losses are massive. They're burning through their cash. Like, this just isn't a good business, and they don't have much time to figure this out before Instagram and Facebook really kill them. I'm so much more bearish on Snapchat than I was previously after reading this quarter's results. So that just is what it is. I mean, the numbers were not good. I changed my mind when the facts change, and so that's what's going on here. I still think there's potentially hope for Snap. They're not dead. They still have 178 million people doing the app. They have this whole redesign coming. They're going to be betting on creators. Like, we could still be in the early innings of seeing an amazing company be built. I mean, this thing is going to be a bloodbath. The stock was down 10, 15, 20% after hours as the earnings call was going on. You know, maybe this is an incredible opportunity to pick it up if you're a contrarian and you think they're going to figure it out. But once again here, Snap on the conference call noted they have 1.441 billion shares outstanding. That's right. So even if they're at $1 a share, this thing is still worth $1.5 billion of market cap. And that's like 2 times price revenue based on the last quarter. So, you know, even if this thing goes to $10 per share tomorrow, it'll still have a market cap of 14 billion. It'll still have a price sales ratio of almost 15 or 20x on this year's revenue. So Snapchat is just ludicrously expensive on a price sales basis. And the fact that their revenue growth is slowing down and they're not profitable is a huge warning flag to me. Like, I still think on a valuation basis, it was thought it was crazy before, but I thought the business was hitting on all cylinders, so it justified a crazy valuation. Now the valuation's still crazy, but the business is hurting. Anyway, that wraps up my review of Snap's quarter. I'm calling this a debacle, Snapbacle, call it what you will. This was an awful quarter. They missed my estimates. They missed Wall Street's estimates. They're losing more money than ever. They're burning through their cash at record rates. Instagram is eating their lunch. Snap needs a miracle to turn it around. Evan Spiegel, good luck. That's Hyperchange. I'll see you guys next time. Peace. Yo, one more thing though, the dancing hot dog costume, I tried to get it for Halloween. It was going to be a cool Hyperchange joke. Like I was going to be the life of the party if I had the hot dog costume. It was sold out. I was like, ooh, this is good. So maybe Q4 revenue could have a bump because the Snapchat hot dog costume sold out. So, I mean, if we assume that they sold 2 million Snap hot dog costumes at an average selling price of $80, that could be 160 million in incremental revenue. I mean, maybe Snap should just go into the costume business because it seems like that's going to make them more money than selling ads. Anyway, that's my postscript joke. Peace.